So, Justin, I'm going to ask you to start. Can you just introduce yourself to the audience and let us know what hats you wear and what type of
Sure.
work you're involved in?
We started off originally with two hedge funds. One of those hedge funds was focused on market neutral, which is a strategy I'm sure many of you are familiar with. We also had a liquid long short token strategy. And we have since moved into capitalizing a studio, which is building out DeFi tools, essentially traditional banking and investment banking tools um, that we believe will be very useful for two real primary things. One is bringing assets on chain, especially real world esoteric assets like leverage loans and mortgage servicing rights. Um, and we also believe in creating risk mitigation tools for institutions to be able to transact much smoother, adding both transparency to their processes as well as bringing down settlement times.
Awesome. So, what was the decision set that allowed the family to really start investing in blockchain and crypto? How did you get there?
Yeah, it really came about. My partner, his roommate at Harvard, was one of the initial contributors to SushiSwap, which was one of the early decentralized exchanges. We started running our own internal strategies about 3 years ago, and got comfortable with those strategies enough to allow in external capital from other partners, especially out of Asia. And then what we decided to do, especially given the environment, was to begin building ourselves. So we brought in uh, four or five engineers, mostly from early contributors to SushiSwap, that now have been capitalized by ourselves and other players in the industry that have also become customers of the products that they're building. But we have many theses around utilization of blockchain technology, hopefully real applications. And well, that's how we got into it. Yeah.
Awesome. And I just want to give a plug for the work that they're doing in the women's health space. Very serendipitously, I co hosted a women's health meeting a couple of weeks ago in New York with Sally Krochek, and one of Justin's colleagues, Haley, was invited. So it's like good people always find good people to do work with. Thank you for that. So, Tim, what made you want to invest initially in blockchain, and how has your thinking evolved since the beginning? Like, when did you start? How did you approach it, and what are you doing now?
So, I mean, I guess I first heard about Bitcoin back in even 2011. And I think someone else, I mean, there have been some great sort of tidbits that have been spoken along the way. I didn't know how to purchase it. It just seemed like an interesting concept. And then in sort of 2013, there was somebody I knew, and actually his family slash himself had backed. They were early backers of Ripple, and there's another person I knew who was he'd already launched, I think, his first blockchain fund. And again, it was very interesting to me, but I wasn't very hands on. And I think as I saw it develop, I'm a little bit of a dinosaur, but I've been around long enough to have seen, like, the long term capital, the dot com bust, obviously the GFC and beyond. And so, and even before there was really email and internet, like I remember I was working on Wall Street and they pulled up a browser for the first time, and it was really kind of interesting. And I was like, this is interesting stuff. It's obviously going to change, I think, the way we interact, the way the economy works. So I, I guess only in the last few years, I said I need to get some exposure to the space. I made an investment in another blockchain fund that's more, I would say, consensus oriented. It was someone I'd known. Um, they were on their fifth fund. So I thought that made sense. I met Zach not that long ago, and I thought this is a bit more contrarian. Um, it's resonated a little bit more in terms of, I think, the things that have been talked about today. As I dove deeper into the space, it seemed as if like so much of what was going on was a repeat of kind of the hype of, let's say, the dot com era. So, um, you know, the way I moved into it, I thought was intuitively I believe that there was this is technology that's real. It's here to stay. Um, I wanted some exposure, but I don't have the expertise to do it myself. So that's why I guess I looked for external fund managers.
So, have you ever had exposure to crypto assets directly? And do you currently now, or is it all through?
I had briefly had exposure to one. Actually, full disclosure, it was BSV. I took a punt, and I don't have it anymore. I've never owned any other crypto assets.
Awesome. So, Justin, Recharge has investments in digital assets and companies using blockchain technology. So, how do you describe the core differences between the two approaches? And I think, this is something, I think this is a very interesting discussion to have in this room because um, I was part of an immigration reform discussion the other day, and it was the same kind of thing where it's like people that already know are talking to people that already know, right? So if there's something that you could say to the general public, for people who are watching this, like I think we all know kind of the answer, but how do we educate others to understand the differences?
As it relates to like black blockchain technology applications, we look at that technology enabler the same way we do any other technology enabler within our portfolio. And that is, does it add any efficiencies to a particular workflow? Because that's where the value is really created. And the two that we've identified that we are the most excited about, um, one of which, well, both of which we are investing in, is bringing esoteric real world assets on chain. Because as somebody mentioned earlier, when you bring liquidity into an inherently illiquid asset, that increases its value. And so the one that we are tackling right now is actually in the field of mortgages, mortgage servicing rights, which generally have to be purchased in very large blocks. And we are going through various compliance protocols right now to figure out exactly how to properly securitize these things. And then within our DeFi studio is, as I said before, building out banking tools, both market makers, trying to bring down settlement times. We believe that there is a lot of opportunity within foreign exchange, especially within what we were talking about in the previous one was on collateralized and over collateralized stable coins, because the environment that we have right now is a decreasingly globalized world. Like countries are closing in. They're not trading with each other as much as they were back in the 90s and 2000s. And we really think that blockchain cryptocurrencies is a solution to that if done properly.
Okay, I'm going to go off script a little bit, but in part of our panel, you're both laughing. You were waiting for it. I did warn them. I did warn them. So, in our panel discussion, we talked a little bit about how diligencing when you're a family office or private investor is all over the map. And so, I want you to take what you said. We're going through compliance right now to figure out how. Talk to us a little bit about that, and then Tim, I would like you to talk to us a little bit about it. How do you diligence and like what are the things that you look for when you're investing in this space different than other types of investments for the family, if any, right?
Yeah, I probably take the second question more than the first. The first one I can't divulge too much on that, but I mean, we've looked at when we started investing in the space with John Lauren and I. I mean, we looked at a lot of managers as well. We ended up investing in like one or two, but what we found, and Tim alluded to this earlier in discussion, but so many of the managers seemed to be kind of banking on the same momentum trades. There wasn't a whole lot of differentiation in there. And we were doing our own internal strategies, basically doing our own type of staking and all of whatnot. And we decided that we wanted to build ourselves, which is why we took engineers in house to do that. So I think that's a lot different than what a lot of other families have done, basically outsourcing their capital to other managers to kind of learn about the space. We had a leg up because we have a very close relationship with one of the original engineers in the space, and who was able to kind of bring his team along. And now they've been working for 2 years with our capital to build. So,
So Tim, take that and I'm gonna invite you to continue along your dinosaur theme.
Well, I think it came up earlier in one of the panels about ODD, and I think if you break down due diligence into the investment IDD, investment due diligence, and ODD, and at least for me, kind of having the exposure or sort of working in the institutional world. Now, I'm not going to replicate that, let's say on the sort of family capital side, but I want to mimic it as close as possible. And for example, I think the evolution of this space, I go back to let's say 2017 when the sort of height of the first run up, being at a conference where there were guys at a table, asking for money, saying, "Hey, I'm going to charge 2 and 20, and I'm just going to buy like a basket of 10 tokens." And I'm like, "This is you're charging 2 and 20 for the S&P 500. Like the Vanguard charges 20 basis points for this." So there's that, on the investment side, how much is beta, how much is just a mass like exposure to the space, and how much is the quote alpha. And so I guess, you know, y- obviously they're, I think, becoming differing themes and different sort of thesis. And this is clearly a sort of this is a differentiated thesis, I think, here, at least on Unbounded. So, you definitely need to look through the investment side. On the operational side, well, I think, in just a quick sidebar, because this address it now versus later, I said, anyone that did their homework on Bernie Madoff knew it wasn't practical within 30 minutes, 30 or 60 minutes, right? What he was offering was this sort of split strike, buy stock, sell calls, buy puts, and I'm going to just make free 15% money. And it wasn't possible. But people got into the sort of FOMO, the Sam Bankman, SBF mentality of like, well, I guess they're doing it and they're making 15%, so I'll do it. Looking back, they all deserve to lose all their money. So I think, on the operational side, and this was a challenge probably 5 or 6 years ago, where in 2017, I met some folks here and I said, how do you even work custody of some of these assets, right? And I'm just a very cynical dinosaur. I'm like, well, what's to prevent you from stealing all this, right? Like, and the answer was, I mean, one of the guys said, well, nothing. In theory, I could probably go do this. And so I think, as the custodian sort of security has improved, as the oversight, I think the washout we're dealing with now is going to lead to, obviously, the more regulation. But I think the bigger, more professional investors are going to revert back to mapping their tried and true, more institutional processes back into the space. They're just not going to throw darts anymore.
We first start with trust, which is the same way of going on direct into entrepreneurs, because at the end of the day, they're the fiduciaries of capital. And especially if they're dealing in hedge fund strategies, then they are the final fiduciaries of capital, as opposed to like in venture capital, where the final fiduciaries are actually the entrepreneurs themselves. We look at, as I said before, the operational infrastructure. I think a lot of people underestimate that, but it's extremely important to fund managers being able to actually maintain consistent performance over time. And then,
Expand
yeah,
on that a little bit. What do you mean by operational infrastructure? How do you define that?
I mean, basically, it's an entire tech stack within a fund. We've lucky that Lauren, John, and I, we've built multiple funds over our careers, and fund has everything to do from like the CRM on how you're sourcing to the programming that you're using for your trading strategies, to the actual reporting to your constituents, and that can be done with many different types of tools that integrate together or don't, and it's all very, very important. The last piece that we look at is obviously like a differentiated strategy. And a lot of that has to do with like kind of mapping out the entire environment and deciding which pieces of that ecosystem we want risk exposure to, which ones we might not be as interested in, and then who is the right person with the right type of edge to invest in that particular strategy.
How much of it is what their track record is, and how much of it is where they see the opportunity in the space?
I think it's both. Track record obviously helps tremendously, but track record doesn't guarantee any sort of future results. And so, depending on the type of investment strategy, whether we're investing in public or privates, equity or credit, uh, that particular manager's network, that particular manager's edge into utilizing data in some sort of creative way, to gain an edge in that particular investment strategy. I mean, there's no real kind of like science to it. And especially when it comes into private markets and dealing with like entrepreneurs, especially at the early stage, trust becomes like 90% of it. And trust that they're even going to follow through on the particular strategy that they're pitching. I mean, in venture capital, that happens all the time. You get pitched on a fintech fund, and then they go out and they'll invest in secondaries, or they'll start doing all kinds of different stuff than what they said they're originally going to do. And that's where you get in hot water doing that.
So, Tim, what are your kind of tips for families or
Well,
private investors?
I actually really liked. I mean, and again, I think they have to. I'd say take a leap of faith in some ways. They have to. It's a more subjective experience for a a early stage venture investment to make it into a venture funds portfolio than it is to say um, someone who's doing MSRs even or something like that, where you can look at a basket of very objective cash flows, and it's quite you're not betting on a person, you're betting on cash flows and prepayment speeds, et cetera. So these are approaches that are analogous to, I think, any other asset class. The one that I think, and again, this is my own experience, but I'm not the expert in this space at all, but I don't think it's been as differentiated. For example, in venture, someone will say, "Hey, we're like healthcare, or we are, clean tech, or we are this, or we're that." Like, I haven't seen now. Granted, I'm not scouring the earth for the various blockchain venture funds. But I feel as if there was this world of larger, the Panteras, the blockchain capitals, they were just kind of getting everything right. I mean, they weren't saying, hey, this is our lane that we're in. But I think that's happening more. And for example, like, Unbounded is in much more specific lane versus, I'm guilty of, I guess, putting money in other type buckets where I think they're just throwing everything at the wall. So I do think if you can differentiate from an investment theme, that is, and that thesis makes sense to you as an investor, I think you got to underwrite that thesis.
Well, and then you also have to remember, I mean, back in what was it 14, 15, when Coinbase was one of the first centralized exchanges and Pantera started their fund. I mean, people didn't have an easy way of buying Bitcoin. I mean, I think I had some friends that were purchasing it through like very odd ways of trying to get their hands on the asset. But just like in venture capital and private markets, we're sort of moving towards this democratization of these asset classes that allows more people to participate. So you can go on Uniswap or SushiSwap right now, and you can trade in all kinds of different exotic pairs, which did not exist before. So it's changed the game and allowed everybody to kind of get involved.
Right. So along those lines, I'm going to ask both of you within these asset classes, so crypto, blockchain, what do you think are the most overhyped sectors? And like, why have you stayed away from those? Right? Because in the beginning, it was just like you didn't
Yeah.
really have much optionality, but now there's a little bit more optionality.
Yeah, I mean, one of my previous partners, he owns a Bored Ape purely for vanity reasons, but for regards to like the capital that we manage, we've stayed largely away from NFTs. I mean, I know that like the Nikes and the Adidas and even Tiffany's just recently participated in their first NFT drops. I mean, NFT itself is a blockchain technology. I think there are some interesting applications with regards to customer loyalty, but so far, the numbers have been relatively small. I think Nike has made about $150 million in sales, whereas the next biggest one, Adidas, I think it drops off to like 10 million. And I don't think those are really geared so much towards customer loyalty. They seem to me to be more experiments. So the NFT, when it comes to like these pixels being sold, it seems like a hype to us. We don't see real use case to it. And so we've largely stayed out of that.
Do you think that's going to change that? I mean, I don't know if you had a chance to see that Amazon entered the space
Mhm.
with their whole. Isn't it like everything? It starts small, then it gets
No,
bigger.
we think as it relates to like NFTs, like for customer loyalty, it makes sense. I mean, if you could ascribe a unique identifier to somebody's purchase history all the way from when they were born, that would be extremely valuable information, and like that's what blockchain technology could do. But we're just not there yet. And a lot of like they're really the price discovery is just ridiculous. I mean, going on OpenSea and seeing these like bored apes that trade for hundreds or thousands of Ethereum, and there it's based on two trades. It's not based on like a well working thing. And the same thing goes for Nike. When Nike goes out and sends out its really cool like shoe, they're making money off of that. But then what happens after that? Like, is there any smart contract in place that pays them for continued trading of that? And then why are people continuing to trade it afterwards, anyways? So
So continue on that path. Do you think it's something that is going to kind of fade away, or you think it just needs to get some momentum until there's a tipping point?
I don't think it fades away. But I think what we've looked at is like with blockchain technology, there has to be like an underlying use case for this. It can't just be, and like when I look at all the staking and stuff going on, that's somewhat complicated trades. I see real use cases for that for institutions for risk mitigation strategies. I don't think those particular tools are necessarily intended for retail traders, which is where a lot of people going on like Anchor Protocol and making 20% APYs was just ridiculous. It's absolutely ridiculous. I mean, all it is doing is inflating its own currency. And if you're a first mover in there, you're doing okay. But you also need to eventually pull out or you'll lose your shirt too. That's what happened to a lot of people.
Overhyped, Tim?
To me, I think the ecosystem of trying to build infrastructure to facilitate like universe of token speculation. Um, I just don't. I think back to like online trading kind of really took off in the '90s, and you just opened an online brokerage company and they valued you massively, and you used to pay, I don't know, like I remember actively trading stocks for a while, and let's say like $20 per thousand or something like that. There were commissions, and they literally now don't charge anything, right? Like all the money in the equity trade, all the money like in E-Trade is through, securities lending and, the prime services they offer, right? So I don't know what the analogy would be, again, because I'm not that intelligent when it comes to the space, but I don't know how these tokens, the universe of that is actually going to replicate that, because otherwise, like if you don't have the volatility in all these tokens, then you don't necessarily have the reason to trade them. And there's a reason why. I think the better long-term value is you don't have the volatility in this. Like this is more like a FX type, environment versus a Nasdaq or penny stock environment. So the transaction cost I think would have to be too high. I don't understand how these companies can actually be worth anything. And then related, maybe I just pile on, but I think it's already come and gone, is the whole concept. I remember, and Zach's heard this story, but um, the folks that would pitch you to, I'll pay you 15% if you park your money here because we lend it in stable coins. And I had someone walk me. I said, "Can you walk me through the chain of custody? Like, how do you turn a dollar into, more than a dollar? How, 15% annualized or 20%? You take your cut." And it was sort of like, then their just head exploded, and they just started mumbling like DeFi versus TradFi, and I was like, okay, lending money's been around for thousands of years, and if you can't explain this, like this is obviously a disaster waiting to happen, and that was a year ago, and those disasters start happening. So I don't think that's, margin loans of 20% only make sense if you can speculate on an asset that's going to make 100%. So, that's, I think, come and gone.
So, ending on a good note. So, why don't each of y'all tell me, what do you think are the best opportunities in the space and why? And let's say you each had an extra 100 million laying around and you can invest in three things, but not anything that you already are invested in. What's happening? You can be as generic as you'd like to be if you want.
Well, I think that the areas that we're most excited about is the scaling solutions, like the ZK rollups, the optimistic rollups. We look at those as like an upgrade to the entire operating system for crypto and blockchain. Um, I brought up the foreign exchange earlier, like the ability to have cross-border transactions, remittances that are based on digital currencies that are collateralized by actual currencies, and then everything with regards to risk management tools for institutional trading. Those are kind of like the three areas that we find the most interesting.
I mean, I don't know if I have three areas, but I sort of the thing that, one of the things that at least caught my attention here. I think it's come up so many times today. Micropayments, actually properly allowing and able to facilitate micropayments at, a negligible cost, is going to. It's just, we don't even know some of the things that can change, right? So I also think, and this is sort of the idea, I guess, from a portfolio diversification. Someone I know who I think is relatively smart actually said, and this was a year ago, that we're going to enter this kind of washout. It's sort of like, post 99, 2000, what was it? Google or Facebook was like 2004, I guess, creation, right? Like a lot of some of these like real dominant economy players were created even after the fact. So I think who knows? I mean, we've heard today that, about BSV, and then we heard about a new blockchain. I'm like, it actually might make sense to have, a few of these bets placed that are, I would say, not counter. I mean, maybe they both can win, but, that are not necessarily correlated. So that's the other thing I would say, is that I don't think we know there's going to be a change. We just don't know necessarily where exactly it's going to come from.
All right. All right. I'm going to open it up to questions.
So I have a question for you, Justin. So you mentioned that sometimes the problem when investing in venture funds as a family office is that they say they're going to do one thing and then they do something else and you're under hot water. Has it ever happened either to, money you're managing or partly managing, or to something you've heard about where that happens and it actually works out really well?
Yeah, no, I mean it definitely has worked out really well before. But the problem is like when you invest in a particular fund manager, especially the ones that are newer and you're in for like the first, second, or third fund, you're looking at 30, 40-year relationships where you plan to continue to invest with them until your check sizes become not large enough to compete with the pension funds and stuff. And so we're very attuned to like outliers. And obviously, when an outlier happens and it happens for the best of us, that's great. But we still go back and look at, okay, well, why was this manager not able to follow through with the original strategy? Maybe that strategy didn't work and they pivoted. If they pivoted and communicated that, that's fine. If they didn't, and it seems like there was no real strategy, and they were sort of just like, running, gunning, and doing whatever they thought was like the hot deal that Sequoia was behind, we find that as an issue and something that's not ultimately scalable.
How many families are in here as opposed to funds? How many family offices? Yeah. Do you agree with a lot of the stuff we said, or do you have any comments to add? Since I moderated you on this panel last year.
Yeah, we're believers in scaling. I mean, like, yeah, I agree with what Tim was, for example, making comments that look, a lot of the stuff is about furthering speculation, and I think most of the people in here are more interested in building real businesses that provide real value that cannot otherwise be provided by using traditional, especially traditional financial payments architecture.
All right. Any other questions? Yes.
Yeah, hi. Thank you so much for this conversation. I was just wondering if you could both speak to the issue of diversity in terms of your investment theses and sort of the challenges for BIPOC or minority or women funds or founders, and sort of how you address that issue.
That is an awesome question considering it's the day after International Women's Day.
Yes.
Woo!
Yes.
Well, what we've done, I mean, I guess we've been very lucky. My partner and I, we've been investing together since 2013. We have 185 portfolio companies, and over 2/3 of them have diverse founders. And you know, we've always gone about this on just picking the best people to solve a particular problem. And I think when you do that, you're automatically going to find diversity in that. And then obviously we still take an approach to making our team very diversified. So we have, Haley that runs a lot of our healthcare stuff. And then we have diversity across all different types of cultures on the team, and we'll continue to build it that way.
I mean, I guess in terms of like I don't have a massive exposure to, in terms of blockchain. I think I've gone more towards the thesis, but I will make a shameless plug that the broker dealer I'm part of is minority and veteran owned. I would say of the sort of leadership, the majority is either African American, women, veterans. Like so, and what we actually do in our business lines, we actually have two products where whatever we make, we rechannel 10% of the revenue back into those communities, to sort of the veteran community, the economically disadvantaged. So, as a sort of thesis, I mean, we are very conscious socially of I think positive social impact. Um, in the blockchain venture space, I would think there will be a lot of benefit to these sort of I guess the world at large by the progression of some of these inventions and sort of technologies. So and hoping, so the teams themselves, I'm guilty of, I guess, not, analyzing, let's say, Zach's team extensively, but I think they just hire the best people, and hopefully, diversity typically leads to a better team.
Thank you for that. I'm just going to make one last comment in the couple minutes I have left. I do think that we all have a responsibility in here to raise those questions and help each other as much as we can to get diversity around the table, regardless of whether it's, nationality, education, upbringing, however you define that word. But I think that, we can look around this room and think that there could be some differences in here. So let's all support one another in making that happen. It happens, one human at a time on a panel or bringing them into the group. I'm seeing some noddings, so that's very good. Thank you all so much. I really appreciate it.